Hello, this is Mike Swanson of Wall Street Window. I want to talk with you today about what's going on in the financial markets. And this article that was in the Wall Street Journal on Monday is titled Stock Downturn Brings Pain to Buy the Dip Investors. But it's some details inside the article that really interesting and kind of explain why the market is actually traded the way it has this year. Quite frankly, it has surprised me. Now, last year I was saying that there were signs that we in the market that we would get a bear market or at least a very significant downturn in the markets. For example, the internals of the market began to fall apart in the summer last year, and that's usually a warning sign that even that something as big as a bear market can begin. But also towards the end of last year, bonds began to go down. Bond funds began to go down before the stock market did, and that was another very significant warning. And they have led the way down. Rising interest rates have driven the bear market. But all that said, I thought that it could trade, like the bear markets I had seen since I've been trading since '98, really, and in that we would, that by now we would have seen enough panic selling to generate some sort of, significant bottom. But it hasn't happened, and it's been like a slow motion bear market, really, in which people keep looking for signs of panic selling and capitulation, and it doesn't happen, and then it just goes on and on and on. And this article explains, I think, why this is the case. And I'm going to show you some more information, and we'll look at the charts. But it points out, and I'm reading it as I tell you these things, paraphrase it, that retail or non-professional investors have been enthusiastic dip buyers, piling in even when institutional investors sell, even when insiders sell. In fact, in January of last year, no, I'm sorry, December, November last year, before this January, there was a massive wave of insider selling, even among some of the most famous people. Jeff Bezos, the billionaire, sold billions of stock. Elon Musk sold billions of stock before at the end of last year, and they've done it even a couple times since then. But the article points out that the buying from the dip buyers, the retail investor, the small investor, has been a big counterweight to the institutional selling. It warns, though, that if the small investor stops all the buying that they've been doing, that this support would disappear and the market would fall more. I would contend that that's what will happen to bring in a true end to this bear market. But here's some fascinating information. This is data, and you need to know it. So I'm going to show, I got on September the 13th, and I'm going to show you what day that was in the S&P 500. Loading up a chart. I've circled it on this chart. It was a big down day. The market had bounced a couple days before that. I mean, now the time goes by, you probably forget about this action. But if you are day trading or closely following the market action, think back to what happened. We went up for like 3 days and in hopes that there was a CPI number coming out, and people thought, well, it might look okay. And then the day I circled, it was a disaster. It's worse than ever expected. It showed that the inflation was not going away simply because oil prices, gas prices dipped a bit, but it was systemic. It was in rent and just normal day expenses. Well, the day I circled, the stock market gapped down and plunged. Now, that was September the 13th. And what this article reveals is that while the S&P 500 fell 4.3% on that day, it was the sharpest one-day decline since 2020. Individual investors bought more than 2 billion shares of stock and exchange-traded fund. This was their second biggest total day of buying on the year. So even though it was one of the worst days in the stock market since 2020, it was the second biggest buying day among the small trader. On that day alone, they bought $400 million worth of SPY, that ETF. And the article goes on to say that all year people have put more money into stock funds and ETFs than they have pulled out. 89 billion of net inflows, according to EPFR global data analyzed by Goldman Sachs, in contrast to the net institutional selling and selling from insiders. Now, one thing that has happened, and I thought this could represent, the coming washout, is because I made note of this months ago. There was a collapse in Robinhood traders. The number of people trading on Robinhood collapsed, and the article points out that the activity among day traders, the intraday trader, as defined by their daily dollar volume, that has had a significant decline and has fallen to levels not seen since January 2020, since before the March 2020 early market crash. So what happened was there was a boom, as you well know, in Robinhood trading, meme trading, day trading, that began in the market after the March 2020 decline. That boom lost steam really a year ago, and there had been a significant decline in the number of people doing it. And now that day trading type of activity, meme trading activity, is really on the decline. So what's happened, and I thought that meant, well, the small trader is out. No, I was wrong about, because what has happened is that the long-term investor, the small account holder who's not a day trader but thinks of themselves as a long-term investor, those are the people that keep putting more money into buying stocks in these funds. They're the ones buying the dip. It's not the day trader, the Robin guy, the millennial. No, it is the long-term investor doing it. And they bought 200 million of the ARK ETF on that Wednesday. So they do buy what I consider highly speculative and funds full of junk, but they're not day trading. They are trying to buy more and average down by the dip. That's what they're doing. Now, I've been in these markets, since the 90s, and fortunately, in classic market psychology, bear market bottoms typically do not come until there's panic, capitulation, which is mass selling, and then people do get despondent. But there's no sign of that type of activity at all. And I have no idea when it's going to come or how much the market will have to decline to make it happen. But it explains why the market has not gone down as much as it more than it already has, or we haven't yet to see a panic washout. Now, this article was on Monday. Now, this morning, there was another article about LQD, a bond ETF. And it notes that this ETF on this Wednesday had the biggest one day of buying since March 2020. So Wednesday was when the Bank of England, when the England stock market fell, there's volatility in the bond market in England, the English bonds dumped, and bonds in the United States also made new 52-week lows on Wednesday. And I'll pull up the LQD ETF so you can see this. It had a big Wednesday decline, new 52-week low. And that big drop in that fund spurred more buying in that fund since 2020. So and these, from the small traders and individual investors, that's who this thing is talking about. So you're seeing so far this year, big down days have not caused people to panic with their money. I know it makes people nervous and uneasy. I know there's no doubt of that, but they're not selling. They are buying more. So to me, again, the takeaway is that the masses are not panicking. The masses are keeping the market from falling worse than it would have. And the day will come when they do stop buying. The day will come when they are sellers. Not all of them, not everyone's going to sell, but enough people will sell to generate a true end to this bear market, a psychological bottom. But it's amazing, we haven't even seen the type of panic you get in an end of a correction in a bull market. So that's what's going on. Interesting data that we learned by reading articles and thinking about it and connecting the dots. If you're new to me on YouTube, hit the subscribe button, hit the bell next to it, and YouTube will send you an alert as soon as my next video is up. And hit that like button. If you're new or if you're old, I like to know that you're out there. And I'll be talking with you later.